Ever wondered how you can avoid paying taxes by buying more property? Well, let's dive into a little-known strategy called the 1031 exchange. This strategy is a real game changer for real estate investors looking to grow their portfolios and maximize their profits. The 1031 exchange, named after Section 1031 of the U.S. Internal Revenue Code, is a tax deferment strategy. It's like a golden ticket for savvy investors. It allows you to sell a property and reinvest the proceeds into a new property, all while deferring capital gains tax. Imagine this: you're trading up your properties, expanding your real estate empire, and the taxman? Well, he's just watching from the sidelines. This isn't some loophole, mind you. It's a fully legal provision of the tax code. Now, you're probably wondering, how does this 1031 exchange work? Well, buckle up, because we're about to take a deep dive into the mechanics of this advantageous strategy. Well, the process of a 1031 exchange isn't as complicated as it might sound. It all begins with the simple act of selling a property. Once you've sold your property, a clock starts ticking, and you now have 45 days to identify a replacement property that you intend to buy with the proceeds from your sale. Now, this replacement property isn't just any property. It must be of like kind, which is a flexible term in real estate. It essentially means that the property must be similar in nature or character, regardless of differences in grade or quality. So, you could sell a condo and buy a ranch, or sell an office building and buy a strip mall. Once you've identified your replacement property within the 45-day window, you're not quite done yet. You now have a total of 180 days from the date of the sale of your initial property to close on this new replacement property. But here's the kicker: to fully dodge those pesky taxes, all proceeds from the original sale must be used to purchase the replacement property. If you do this right, you'll defer the capital gains tax that would typically be incurred from the sale. This marvelous tax strategy allows savvy investors to grow their real estate portfolios while keeping their tax bills at bay. So, are there any restrictions to this 1031 exchange? Yes, as with anything tax-related, there are rules and restrictions to a 1031 exchange. Now, one of the key rules is that the properties involved in the exchange must be like kind. This doesn't mean they have to be identical, but rather they should be of the same nature or character, even if they differ in grade or quality. So, an office building can be exchanged for a rental property, for example. Also, these properties must be used for business or investment purposes. So, your personal residence wouldn't qualify. Now, onto the concept of boot. In a 1031 exchange, the investor cannot receive any boot, which is any additional profit from the sale. If you do end up with a boot, it will be subject to taxes. Remember, a 1031 exchange is a powerful tool for real estate investors looking to grow their portfolios and avoid hefty tax bills. So, what have we learned about 1031 exchange? It's a nifty tax deferment strategy that allows you to sell a property and roll over the gains into buying a like-kind one. There are specific rules to follow, including time restrictions, but once you master it, it's like having a secret weapon in your real estate arsenal. With 1031 exchange, you can truly maximize your real estate investments. So why not consider it for your next property sale? And as we wrap up our discussion on the 1031 exchange, remember, it's not just about buying and selling properties. It's about making smart, strategic moves that can greatly enhance your financial future. The 1031 exchange is one such move. It's a complex tool, but with the right guidance and planning, it can become an integral part of your real estate investment strategy. Don't let the rules and restrictions scare you away. Instead, see them as a route to a more profitable investment journey. Remember, the journey of 1,000 miles begins with a single step. So why not take that step today and start learning more about 1031 exchanges? And if you found this video helpful, don't forget to hit the like button, subscribe to our channel, and follow along for more financial tips and tricks. We're here to help you navigate the world of finance with ease. Stay tuned for more, and as always, thank you for watching.